Hey guys, so we're going through our tips and trick list. So with this tips and trick list, we'll do this every month or so. Um, so what happens is you guys compile questions that you want to seek more answers with, hone in on a little bit more. Once we get a few, like 5 to 10, we'll go through that in a video for the month just to help you guys out. So if you guys have some more of these, make sure you watch the content first. But if you have some more follow-up questions, in this style, we'll repeat this, and yeah, it'll just help you guys out with whatever questions you might have. So these are the ones we have for this quick session. Okay, so first things first, we'll go top down. Premium discount, high time frame to lower time frame. So premium discount's a little bit tricky sometimes because we might use it for something that's not legitimate. Okay, um, so with the high time frame, lower time frame, we can see that on the low time frame, on the high time frame, sorry, we'll have a strong low that forms and a strong high. Whenever we have a strong high and a strong low that forms on the same time frame, it creates our range. Okay, so we can pretend that this is on the hourly, right? Now we have our working range. All right. Um, so what does this mean for whatever happens in the future? Well, it really dictates how we're able to actually trade. Okay. So what happens is we might start getting pullbacks like this, and then we'll have downside continuations of these pullbacks. And then we might hit into this demand. And this is where things get a little bit different. Okay. Um, so let's say that now we hit into this 50% that we actually break structure. All right. Um, Hold on, let me redo that. We break structure here. What does that actually mean when I say we're breaking structure? These lows aren't strong lows, so we're not creating internal ranges. But now here we sweat broke structure, and now the same time frame, most proximal one is here, which swept and broke structure. So now we have a working range within here. Okay, so we have a range within a higher time frame range. But as you can see, this low came into this 50% to actually create this strong low. All right. So super important that you guys recognize that these lows, pullbacks, to this supply order flow will be, reactive price action. When I say reactive, it means that when we hit into a zone, we're doing something like this, right? We're creating an instant build up because what's happening is institutions are manipulating this reaction. So orders from the left are just funneling into price, moving up until it hits into that area of continuation and then it melts. Okay, so that's what I'm talking about when I say reactive price action. But because we hit into this 50 now, what can we say? In what scenario can we say that we can actually sell from this premium? It's when we've exhausted all the demand slash trapped all the demand within this area. That's if we want to be looking for sell continuations. So let's say this is our last point of demand in that 50%. Okay. So we can either A, trap, so create continuational. Let me redraw this real quick. We can either A, create continuational structure for demand to continue to the upside, which would mean we'd have to mitigate out that last point of supply. Everything above this would be mitigated slash trapped, and then we create inducement and continuations for buys here. We can either do that, or of course we can trap the other way around. So we can either create EPA from this demand and build up like that, then have an either vector level or non-vector level entry. Um, where would we be trapping? We'd be trapping the movement up to that supply. Either way, right? Let's say this was the outcome. Okay. So now we've hit into that last point of demand. We'll come back in. We'll sweep that last point of demand, and however we have a minor or medium inducement pullback, we will, and then we'll just melt. We'll visit into our discount one last time, and then we will melt through all that discount. Sorry, so we'll visit within our premium one last time. So let me just draw it out like that. Yeah, and then we will melt our discount because we've Now we don't have any more active demand we could use. If there was demand down here that's active and we could induce it, that would be a completely different story in the way that we would respect it. We'd be looking for buys back into this premium up here. Then we can look for sell continuations. So it's all based on how PA is affects us. But when we see a real run, um, is when we've trapped all our either demand or supply um, within our, in this case, it's demand, so within our discount, and then we come back into our supply and then we run. So just one last thing, internally we must be respecting our premium and discount as well. So if we have that strong low and that strong high, they're the same time frame. We find what's most proximal to that. We got to respect the 50% within here as well, and it's the same function. We will keep using our premium until we trap that last point of demand in our premium, and then once that gets trapped, we can just run through it. Okay, I said discount. Sorry, guys. I meant trap everything in our discount here. Come into that premium and then we run. It's the same rules that apply, but we've got to make sure we're following this high time frame one to the left as well. Let me see if I can find a quick example. Let me go on the hourly. Okay. Um. Okay. Let's have a look. Maybe go to the left a bit more. What am I? I'm on the hourly. Okay. One sec. Okay. Let's just look here. Right. I see this low that's formed. That's clearly sweat lots of liquidity. And then we've broken structure, and then we have this on the left. We can see it swept this high to the left. The low that created that high broke structure. So we have a range, right? And these happen on the same time frames. So what do we have in here in our discount? We have a demand zone that we can utilize, okay, within our discount. So that's valid because it is in that bottom 50%. Now, see how price enters within here. Down here, right? Other than this potentially being a POI, which, it does a little bit, this is one of those last points of demand. We hit into that, come back in to our premium, sweep liquidity, okay, break structure again, and create a new POI that forms within that discount, okay? Now, if this didn't exist, it would just run. But because it exists, right, and it is active to use, we will get a pullback back up. Otherwise, we wouldn't, and we could just sell to that end. That's what I mean. We got to make sure we trap everything that exists within that discount first, because we're looking at demand as an example. But anyway, we come into this. What do? We sweep liquidity. We break structure. So what do we got? An internal strong high, strong low. This is our external strong high, strong low. This is governed by an even larger strong high, strong low. Where's that? Up here to here. And look at this. This 50%, price comes within there to sell off. Same thing, right? That's why we overlap from the higher time frame to the lower time frame. Whoops. Let's get rid of that. Okay, so when we hit into that last point of demand, we're creating another range. So we need to put in our premium and discount. Here, internally, we have a form of inducement that forms, okay? But these buys are valid because we're in the discount of our range from this strong low, but we're also in the discount of this higher time frame range, okay? Now we know we have to get in this premium. Premium is here, premium is here. This is that minimum level we have to get into because we only want to look for sells above this level because we have that governing high time frame premium and discount. We sweep liquidity, we come into this area, which is in our premium, so we can now sell, right? So we sell from there, we can, if when this strong high forms, we can sell from it, but in this case, it formed quite late because the low was there, but on the lower time frame, we can look to sell from here, we can look to sell from here. Now we've exhausted our demand, so we have a range winner, right? Which is the end. So we can target this endpoint because we've hit all our demand out. So that's how we can utilize high time frame to low time frame premium and discount. Okay. VTR reductions. All right, I'm going to pause it, find an example, and I'll be back. Alright guys, I couldn't find the cleanest example for this. Like I didn't look very long, but it's like it's better to draw as a diagram anyway. So VTR reductions, first break all come into the umbrella of order block refining, right? So for example, we have a break and sweep like this, we have an inducement, we have a reaction, right? That's the basis of how we enter, but there's a lot more going on, right? That we have to look at, especially within the POI, right? So I'm not fully going to go into the order block idea, but I will quickly go into it. So what's happening at this point? Why is price reacting from a certain level, being this level, right? There's a reason to why price reacts from this certain level. Um, so when we have a VTR, right? And let me just draw something a little bit different. Okay. Um, just something like that, and then like that. Okay, so when we have a VTR, we have our break, our sweep, our sweep, our break, and then we look at the bearish bodies to the bottom wick. That's how we extract our VTR. Okay. Um, so why don't we just grab this whole thing every time? Because what we can do, we can actually extract our order block into that last point that swept this liquidity. Now, if you remember, what is a sweep and break? What's the bank? What are the banks and institutions doing to create this sweep and break? They're selling from each of these points here. Okay, so institutions selling here, selling here, selling here, right? Now what's happening within these areas? Let me move this just so you can see this clearly. What's happening is we're actually having internal mitigations to sweep this liquidity. So these orders are transferring within this area and then we sweep that liquidity. Alright, so where the last installment of orders that swept that liquidity, because this has been money transferred, it's not these, it's only this, right? So I'll actually keep this supply zone drawn. That's that last installment that swept that liquidity. Like I said, how do our order blocks work? The banks don't have a stop loss, nor do they ever take profit, okay? But they have an entry point because every entry must have an entry, right? So think of this as infinite because obviously we're just looking in in a way to simplify, you know, this idea because obviously they wouldn't have this, but they have a false move in the opposite direction because obviously price comes in maybe to something on the left, sweeps that liquidity and then pushes up. They have their buys in the market like this, however the fuck they do it. They whatever, right? They have their buys in the market, so they're good to go, but they're not good to go on this one, right? So they're in drawdown, remember. So what do they have to do? They have to reach this point. Sorry, I'll get it exact. Right at that high, because that high is exactly the point of installment, the point of that vector push to sweep the inducement. That's where we get our vector level from. We have the vector level is the level of vector candles to sweep liquidity, sweep inducement to a POI, right? So they have to reach this point precisely here to get rid of the drawdown that they're in. Because where's price? It's all the way up here in their drawdown. So what does price have to do? Sweep inducement, get rid of the drawdown. So now this is become break even, right? This sell has become break even. They're in their buys and they can take another position that sweeps liquidity, breaks structure. What creates a strong low? The sweep of liquidity. What's this sweep of liquidity? Inducement for what? Our institutional level, which is our true order block level. So how does this wind in to what I'm saying about VTR reductions and first break here? It means that we have to find that last high that swept that liquidity, as long as it's mitigated, okay? Now, this can not be mitigated, and this can be used instead, right? So this is going to look a little shit, so let me just change this up a little bit. This can be used instead, because it didn't get mitigated down, right? But this, let's say this did get mitigated, this one here, right? So we can have two order block levels. So that's why we can have something like a second miss where we go exactly like that, right? Or we can just have an order block left behind. So we run, and maybe in a few days, we can have complex pullback. We pull back into the extreme and then we run, right? So we can have two different levels of order block within a high time frame POI. Okay, so make sure to look in and refine and study what's happening in your point of interest. Right now, let me show you a few things live in the charts if I can, where you might slip up or go wrong or get tricked or confused. Okay. Um, but yeah, you really try and understand this, okay? Sometimes we just hit that top and then we run and it doesn't even hit into here, right? Because we detach and this high created that push, right? It didn't mitigate down. If it mitigates down, we can just use that last one. I always recommend trying to use that last one. If you miss this, that's fine, okay? Um, but if you understand what's going on, that's even better, okay? Um, but that's that idea there, right? That's that institutional level that Price has to meet to get rid of the drawdown. Why would Price want to go down here, right? It doesn't need to go down here because it's already met it. It's going to be as efficient as possible monetarily. So it's going to take its level and then run. The algo has met the point it has to, okay? So I hope you guys can benefit from that. Let's go to this. As I said, I didn't find the cleanest example, um, but here we had a reaction to price. I'm going to go on the high time frame first. So let's go on the 30 minutes. That should be good enough, right? And we had a reaction to this area in here. Now we can see we actually have quite a nice order block there. We have the body and the bottom wick that we want to grab. It's coming from a sweep and a break of structure. So what do we always want to do? We want to start from the very low, all right? If price mitigates, we want to follow that mitigation. We don't just want to like start here because it looks good. As you can see, that got swept. Always start from the low and move yourself up with it, okay? Um, so back on the 5, right? It's like a 1 hour POI, so I'll be looking on the 5. If I have a 5 minute or 15 minute POI, I'll be looking at the 1 minute, okay? You can look at the 1 minute for a high time frame POI, but that's a bit silly, right? Um, anyways, starting from right from the very bottom, yeah? Like this, refinement, it missed, right? Because it doesn't need to hit the refinements, right? But we had a sweep of liquidity and we had a break of structure, right? Now look at this. Mitigation, 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 mitigation to that last point that swept that liquidity. So where does price have to go within? Within this level here. But we can reduce our level with non-sweeping price. So what is that reduction? It's all the way down to here, to this level here. Okay, so that's what reduction is about. So let me just draw something up here. So we have a push into there, and then we have weak price branching out of our sweep and break, just like that. Sorry, it's a bit messy, but yeah, we have price branching out that sweep and break. Why do I consider this weak pricing? Because none of it swept. So if we're looking for our VTR to be here, we can reduce that to being here. Okay. Now, what if one of these swept? Then I would be looking at this and this as well. Why? Because same thing. If this swept, that means this high is an institutional level. Why is this high an institutional level? Because it's swept liquidity. Okay. So following the same thing, we're just zooming in and out, right? So that's our reduction idea. So if we have this pricing, we can look on the 1 minute if we really want to, but as I said, it's not important to over refine, okay? Because you can miss trades, and obviously we usually wait for that 1 minute time frame anyway. If you're a 5 minute trader though, I'd suggest you get good at this. But yeah, back to what I was saying, we have weak pricing, so we can reduce our POI to this. We don't want to do this. We want to reduce it to what the algo needs to meet, and that's exactly what we hit in here. Now, before I go off topic, this is that reaction point that we got from the right. So why do we react to there? Again, we sweep liquidity and even to this point, and we break structure. Okay. Now we sweep liquidity, break structure. We have a strong low that forms. Um, so what was the last point that swept this liquidity? This high, right? Because this we came up and then we swept, right? But what? This high got already visited by this wick here. So that's our money transfer, right? We transferred those orders to here, and what did? We swept a point of liquidity. Now, what swept this liquidity? This high did, right? Do we have another high that swept that liquidity? No, we don't, right? We don't have another high that swept that liquidity. So price has to visit, let me move this out of the way, technically has to visit within here to here, right? What do we have here? We have a form of weak pricing that we can utilize as an inducement here because it didn't sweep a low, right? This isn't a low that it swept, it just came down um, and we left a lot of those orders here, so we can end up using that as part of a point of inducement for this POI here. Am I going to grab this last refinement? No, I'm not. I can grab the VTR and then I can reduce it to the weak pricing coming from that. So this will be my POI. Okay, and as you can see, we hit nicely into there, had a nice reaction. Right now, important to note that this low, why is an inducement? Because it got mitigated by our smart money trap here. So we want to piece these things together. This came down, mitigated here. That's the last point of mitigation. What do we have here? Unswept algorithmic orders that we have to capture because we have that order block level and we never swept into it because it swept liquidity to the left coming from the bottom. So this will take a little bit of practice to do, but refine your order blocks. Very important. With like the backtesting and stuff, I don't do it much because it does take some time. But when you have every day where you can have opportunity, you have the time to do so. So make sure you do it. Um, but yeah, that was that one. Awesome. Let's go into our next point. Let's move this a little bit up here. Okay. So we're looking at now vector level entry versus limit or M1 mitigation. Okay. Um, so basically we've looked at this with the system, but when we have a POI, how do we enter from that POI? When we have a form of inducement, right? And we're looking to take our entry. Now, obviously, there's a bunch of other confluences we need to stack up to actually know that we can enter from this point up here. But, you know, putting that aside, in this scenario, we already know that we're gonna sell off from here. Okay, so how do we know whether to put a limit or wait for a phase two, which is a vector level entry, right? So what will be happening in this scenario? What do we have to really be looking for? We have to be looking for the push up that swept our liquidity. Okay, so if we think of this as the order block thing again, right? Let's say this is what, and I know it's huge, but this is what swept our liquidity, right? So that becomes now an active zone because essentially it was the one that caused that sweep of liquidity and did the same to the left. So we have to come visit that first, all right? Um, but okay, let's just make this look a bit different so it looks a bit more clear. Something like that, okay? So what are we going to see for a vector level entry? We have to see a strong low form here. I know there's no liquidity there, but let's just pretend there is in this case. We need to have a sweep liquidity, a break of structure that's proximal to sweeping to the POI that we swept the inducement for. Okay, because in this case we'll have something that's valid to react from, but realistically, what will we actually be like having in terms of how we look at our structure? We will have a 1 minute range. right? Now, if this was 4 hour, it'd be like 15-minute range, right? But I'm just talking about this being a 5 or 15-minute POI, okay? So what does that mean? When we have a strong low and a strong high, we have a range, right? So that's exactly what the vector level is telling us. We swept the liquidity to the left, like so. We created a push and swept that liquidity to the left, and we created a strong low. So now we have a strong high, strong low with supply and demand, um, engulfed within the extremes, okay? So what does that mean? We have to be able to look for sells, we have to trap demand. To be able to look for buyers, we have to trap supply. You know what I mean? So in this case, how do we trap demand? We got to mitigate it out first, right? We got to meet that demand. Now, obviously, we can trap this completely, and I'll be looking at that in a sec with you. That'll be the next point here. But because this is valid and active, what do we have to do? We have to come meet our demand, and one side traps, one side induces, right? So now when we reacted to our demand, what do we do on this side? We trapped, it can be a smart money trap, EPA, it doesn't matter. And on this side, we induced, right? And we've mitigated out our final 1 minute range. And you know what? We can also use a premium and discount on the 1 minute, right? Because it's all fractal, works on every time frame. In our 50, we have our POI, the inducement can be under the 50 sometimes as well, right? But we trapped demand and we induced supply. What would this be? Our vector level, because this swept our inducement into our 15-minute or 5-minute POI, right? So this would be our VL. So mark it out. Um, yeah, right? Now, the other idea is that, and this will be our phase two, obviously, this will be our phase one because we created that 1 minute range. Now, the other thing that can occur is we have this sweep, we have supply, we have our demand, we have our vector level, but supply, we do something like this instead, right? What would that mean? That means we trap supply, but we induce demand. So this up here becomes a smart money trap, right? It'll obviously look however it wants to look, might look a bit different, right? We can mitigate that out just like that and just end up trapping it. We induce the bottom, so now we can take entry from our vector level. What would that be? That would be an inducement pullback, okay? So it's really important to mark out our vector level if it occurs, okay? Um, Because in this case, we did the opposite thing, right? We still had this inducement, but what would this inducement be now? It would be medium or minor, which would be an inducement pullback, not a major, which would be a phase one. Okay, that's the difference between it, pulling back, moving up, or going down. Um, Now, medium minor rules and then the major rules are really important to this because this is probably mitigating something that's already mitigated. So the orders coming down from here are reactive, like I mentioned before. Institutions have no interest in continuously mitigating this down. They just want to return to the institutional money to continue to the upside. Major, completely different, right? Be the other way around. They are very interested in mitigating out this supply. Okay. So that's vector level entry for you guys. So really important, mark out the 1 minute range because that's what the vector level is. Now an advanced vector level is a little bit different, and I'll quickly go over that. So we have a supply, right? We have a big push to the upside, a break, right? And then we have a big rally here, and then we have something like this. Okay. Now, what is price? Let me put that here. Now, what are we searching for? We have a very nice looking demand here, for example, right? And we're like, awesome, we have a vector level, we have a supply zone. We have strong low, strong high. We can wait till this gets mitigated here so we can come back and hit our, it doesn't happen, right? Why doesn't it happen? Well, it's the same kind of idea we have with our order block, well, our institutional level, kind of not strategy, but objective system, right? What swept this liquidity? This high did, right? We visited that high already. So this is, well, we can even make this line our AV, advanced vector level, AVL, right? Would be AVL. We know that we've actually visited the institutional level already, so we mitigate that vector level here. So we should be looking for our entry from here rather than waiting for a smart money trap. So SMT, right? So an advanced vector level is basically having a smart money trap to our vector level, but not necessarily because we've already mitigated it. So we locate, so I'll rephrase it. We locate a smart money trap within our vector level. That's how we get our advanced vector level. We see this quite often, okay? So important, always extract the institutional level of our POI, okay? Because that's our true order block, point. So yeah, that's our advanced vector level, okay? So we can take entry from here because we know we've visited within that institutional level already. Hope you guys get that. Now, limit on one minute mitigation, right? So the example I'm going to hit you with is news, right? We have a big POI, and what happens with news? It goes like this. Boom, right? Always, always tends to happen with, some red flag news. So let me just draw a POI out. Okay, perfect. So what's actually happening here? Why don't we get our vector level entry? Well, what's happening down here? That's always what we got to look at, the build up towards the inducement for our POI. What we see is number one, we don't have a strong low, a sweep of liquidity and a break of structure, right? So what does that mean? It's a weak low. So what is it? It's a smart money trap, right? Because of that, we cannot come into here and pull back and create a 1 minute range. It's not possible because we don't have a strong low to strong high. So we don't have a working range that we can work within. Okay. So price will just melt from that point. And yeah, we'll often see this with news, but what does that mean? It means here we can place a 1 minute limit. Now, in these scenarios, often we can see an advanced vector level setup, maybe something like this, right? Where we have an advanced vector level, right? But we got to see these things happening. We got to study the build up towards hitting into our POI. Very important stuff. Okay. Um, but yeah, there's nothing price can react from. Now it can use this whole structure as a break and sweep. When I say this whole structure, I mean this one here, right? Because what's this? It's a sweep of liquidity breaker structure. So it can use that whole structure as a point to react from. That's where we can get those inducement pullbacks and continuations up from a strange point because it's actually using a higher time frame structure. Um, but yeah, these are just the different scenarios. And if you miss a trade like this because you're waiting for a vector level, you got to see why we actually trapped our vector level. So we can either not create a vector level. In this point, we did both, right? We didn't create a vector level. What if this did sweep? We do create a vector level because we have a sweep and a break that took out this inducement. But in this scenario already, I've kind of got it marked up. We swept, we broke, but we trapped buys, right? We have no inducement for this point of interest. So even if it's a strong low, it's going to run it anyway. So how can we enter from here? Well, first what we got to do is we got to study our POI, number one. Second, we got to study our reaction. That's if we're looking for an M1 mitigation. So in this POI, we have a sweep and a break. This is that last break that took out this sweep of liquidity. So where can I refine to? I can refine to that point here. Now, sometimes there's going to be a break right before the sweep of liquidity, right? So we can have a tiny refinement, which is perfect and ideal for us because that means we can have a small stop loss entry, right? Remember, this occurs in every time frame. If you're a 5 minute entry trader, you can do it from 1 hour slash even sometimes 15-minute POIs. Okay. Um, but yeah, right, just following the same thing. That's what, if we want to use a refinement. Now, in the case that we don't want to use a refinement, let's say the refinement's huge. Sometimes it is, right? And this will limit me from taking a trade if it's too big. What if the refinement's like this, right? We don't want a huge stop loss, like a you might want to, that's completely fine. But personally, I don't want a huge stop loss where something that's 4 to 1 can be 20 to 1 instead. So within here, I'll be looking for a rejection, a rejection, and then a 1 minute mitigation from that rejection. Doesn't necessarily have to create a strong high, but I need a point of rejection. So I need to see sell candles coming into the market, even a bearish engulfing if you want. And then I want to see supply come into formation. From that supply, I'm going to sell it, protect the highs, and then aim for my target. This will reduce me having to use a stop loss, but the important thing is you got to make sure that it's hit into that institutional level that we've extracted from our order block to the left. Okay. If it hasn't and it's doing this under it, you're likely getting induced, and price could just go whoop like that. Okay. So make sure it hits your institutional level because it'll induce you as much as it needs to until it hits into that level. Okay. But that's that 1 minute mitigation, and I recommend that the most. Also, because if you have like a pending limit, right, and price just goes straight through because you marked up something wrong, you might, yeah, you could take a loss there, right? So that 1 minute mitigation is a bit of insurance to say that, oh, we got a rejection, I'm going to take it straight from there, and you have that insurance on your side. All right, awesome. So let's move on to the next, the next point. We got high time frame influence. So I feel like I kind of went through this a lot in our past videos. Um, so I'm gonna skim through it quickly here, right? But if you do want me to go over it more, let me know. I will include it more into, whatever future lessons or sessions that we have. Um, but yeah, high time frame influence, it's very important because high time frame has the most liquidity. All these lows and all these highs are full of liquidity, right? Because they're all a day, right? It's a whole day of liquidity, and we have an exterior. We have two exteriors, and we have price within. Those exteriors are holding all these sells and all these buys. So the high time frame is important because it has all that liquidity. It rules the market for the lower time frames. So I don't know, let's say we're just randomly here at this singular point here. What's the high time frame influence here? Obviously on the lower time frame, we're gonna have some 15-minute price action to work with. But we gotta see where is this reacting from the left. We have a high time frame level of demand. Um, do we have a level of inducement for that? Well, if we do end up refining it, which we always should, we do create a level of inducement for that, but we don't have a high time frame level. Straight away, what information does that tell me? It tells me that we don't have a high time frame level of inducement, but we have a low time frame one, and we can use that low time frame one to have an intraday pullback, right? Well, that's a whole week of pullbacks, right? But we know that at this point we're gonna start to pull back. We swept inducement. Are we trapping within here? Well, this is all based on what's happening with that higher time frame. Um, as well as that, we're going to have, the premium discount that we can use. Um, uh, and yeah, like I said, the inducement level for the POIs that we can extract from it. Okay, so if we're looking for um, our mains, just our basic, setup, right? We have a form of supply PR, didn't fully get mitigated, right? But we do sweep into that. Okay, so how are we actually going to be able to extract that information? Well, we've got to see that we're reacting from something to the left here. So it's a form of inducement to something to the left here. Right? We have to come back into this demand. For example, we have our premium and discount because we have sweep liquidity, break of structure. sweep liquidity, break structure as well. We come into that, we mitigate out that last point of demand, sweep liquidity into the supply that's formed where we have that last break of structure, and then we move off. Now, this is more showing you the practicality of the market, but we are just looking at the same thing constantly, right? So how is this going to help us? It means that internally here we can sell to our discount, right? To this level in our discount. Um, Here, right, this is the 5th of Feb to 25th of Feb. So this is a whole complex pullback back to this supply, knowing that we've trapped internally within here. Okay, so it just gives you directional bias, um, but it also really helps to actually find objectives for intraday price action. Okay, so that's kind of the high time frame influence. If you want to understand a little bit more about it, like it's a bit broad to just say high time frame influence, but you're just finding how the high time frame will impact intraday, because that's what we trade intraday. Okay, so yeah, if you want to know something specific, just let me know, and let's make it more specific for the next video. Next point's advanced vector level, which is actually what we've gone through, so we can skip that. Next one is external POI inducement versus internal. So I've really been keen to show you guys this one. And it goes into our idea of how we can have kind of our second miss, how we can have our zone trapping, but also how we can miss entries when it comes into our POI. So let me show you something cool. Just as a diagram, we're going to do a bullish diagram. Okay, so let me just draw this out. Yeah. Okay, something like this, right? So let's just mark this up, right? So it's our good old inducement, our POI, right? Our sweep, our break, we can have our vector level reaction, and then we have our entry, right? And we enter for buys there. Okay, so what are we specifically looking at? We're specifically looking at our inducements in this case. So what inducements do we have that are marked out? We've got A, this one, and we've got B, this one here. Okay. So let me just pause real quick and I'll see if I can get an actual example. Alright guys, so I did find an example, it's just here, we'll look at that in a sec, but let's go over this diagram first. So why are A and B important? Well, if you remember one of our older webinars, we were going through the different retail traps that we can get within the market. Now what A and B allows us to do is it allows us to see two different retail traps before we enter, and that is A is retail. Okay, this one's a little bit easier and something we're more accustomed to seeing. And then B is smart money trap, okay, which is a little bit more difficult, right? So what's actually going on here? Well, why is A retail trap? Like we say, our phase one, our phase two, even our inducement pullback can be a form of our retail trap. It's what we get when we have our, I'm just going to quickly mark this out, sorry, as our VTR, okay? Our VTR down here, and then we have this refinement from our institutional level. But yeah, our A is our retail, because what do we have when we have an inducement? We see either a support, right? That can be also a resistance. So let me make that a bit straighter. Support and resistance, yeah. And let's just type this out, right? We got support, resistance, right? Everyone knows support and resistance trading. And in my opinion, banks love to make it well known because it adds more liquidity to the market, right? We have support and resistance. What is this also known as? Equal lows, right? So I don't know if you knew this, I'm sure you did, but people buy and sell from these points, right? People are selling when they have respect of these resistance points. People buying when they have respect of these support points or equal low points. That builds that liquidity, right? So this for us is in the form of inducement. We know that we take out these pending buy orders here, or sell stops if they think it's going to break, right? Either way, they're getting liquidated and then we buy into POI. That's where we get our inducement from. That's A, right? So that's the important thing about A. It'll be in the form of retail money. What's the last one I didn't mention, right? This one, trend line, right? Respect of a trend line, people are buying at each of these points. Buys, buys, buys. Trend line breaks, induces, reverses, right? Sometimes it might be the other way around. We do a fake out, people are selling from the breakout, and then we come back up and then we continue down. Whatever, we're still inducing these retail traders. So A is in the form of equal lows, equal highs, support and resistance, and trend line traders, right? So basic retail. Now, within B is a little bit more tricky. It's our smart money trap, okay? So as you know, we don't just get the retail come down and then run, right? Life would be too easy if we could just do that, right? So what happens is price makes it a little difficult to actually, be able to get an entry from that POI, and that's where our smart money trap comes along. All right, so how do we, work through this? So let's look at the example real quick, right? So support and resistance, right? Our retail in here. This is in the form of a trend line, this one, but we're finding the mitigation cycle of that retail money, and we're using it for our zone below. Now, here we have a sweep, this low, sweeps liquidity, break structure up here. This is within that sweep and break, but we know it to be a smart money trap. Okay, because we have our last breakpoint that swept this liquidity to the left here, so we know we have to meet in there first. This smart money trap mitigated this week low, so that would be part of the mitigation cycle there. But see how it's A and B? We're separating 2 points of retail liquidity, taking them both out and then running. Okay, here we have a vector level that created the sweep of the mitigation cycle for the POI. We hit into that, we induce POI, we run. Okay, so we have these two forms of liquidity we got to be searching for before we take our entry. Okay, now the thing is, if you're a high stop loss trader, you can be trading in a smart money trap, right? So to reduce that for you, you got to locate the smart money trap within your POI as well. Um, People were saying this week, but this week got mitigated by here, so we don't want to use this week, even though it's sweep liquidity, right? Because it's part of that mitigation cycle. That's why mitigation cycle is so important. We know this to be a smart money trap because it didn't sweep any structural lows. It did break structure, but it was formed from a breakout as well. If we can see, we put a trend line there, right? So there's lots of retail traders at this point. So that's how we got to use retail traps in advantage to our situation. So our POI would be down here, right? Right below here, right to this low here. Okay. And because we have that vector level created, we can wait for that entry. So beautiful entry here, just understanding that. So like I said here, it's in our break and in our sweep, but here, sorry, I'll make this a sweep here, but obviously it's not drawn up. But here, let's say there was a high, that's last high, that's what that liquidity. That means that institutional level is actually here. So our refinement is here. So what is this acting as? Kind of like our second miss, right? Obviously second miss goes much higher in some situations. Sometimes we just do this. But at the end of the day, we're accumulating before our true institutional level. Okay, so we can box this up to say it's that works, our accumulation. We have two forms of accumulation before hitting into that point, our retail and our smart money accumulations. Then we have our manipulation, and then from that manipulation we have our expansion, going back to basics, right? Following the same thing, right? So always box this up to practice, right? It's a great way to practice. Um, But that is our external POI inducement versus our internal. I don't really like saying external, internal because it's all internalized in this like range itself. So I'll think of another way to phrase that. Um, but for now, we can just say our retail or ANLB, our retail and our smart money inducements before our true POI. Okay, cool. I hope you guys get that. If you have questions, just ask. We can make it in the next one. Um, great. Phase two versus limit. We went over that. That's exactly what vector level entry versus limit is, right? Same exact thing. Our phase two is our vector level entry. Um, cool. Predeterminism. Awesome. So this is a good one. And I've been over it lightly before, but a difficult thing is how we can actually, decipher our undetermined inducement. Okay. So, like we always drawn up, we have a POI here. We have a form of inducement for that POI. How do we know that this is either going to be a reversal or a medium inducement pullback? Now, the reason I'm not saying it's a minor inducement pullback is because of the fact that a minor is is a trap. So it'd be something like this. Because a minor is when price is reacting from something that's not valid. Now, a medium and a major are both valid POI reactions. Okay, so how do we know that this is going to reverse or pull back and then go up? Now, we don't exactly know, but we have our predeterminism. That's how we can separate this major versus medium. Like it says here, predeterminism. So what do? We call this X. What's X mean? Remember, it's undetermined. Undetermined because we don't know whether it's major or medium yet, right? So what will we see in a medium inducement pullback circumstance? What we'll be seeing is we'll be seeing a predetermined POI form, okay? So what will usually happen is we will induce into that and hit and then continue. That'll be our medium. That means this is a counter trend inducement pullback trade back to that medium. Um, and that was that joke we were going over that was sent to the group the other day. It was saying a minor inducement counter trend inducement pullback would mean that we're trading from here to here as a minor inducement, which you shouldn't do, okay? Trading a minor inducement pullback is very risky, but if this is very high time frame, it is possible to do so, okay? But yeah, back to what I was saying, right? We'll create some form of predeterminism. In this case, like a strong low. And obviously I haven't drawn it here, right? But so let me just quickly redraw it. We could say we have a form of inducement for that strong low. So we're actually saying, price is saying, it's like we want to revisit this area and have an actual reaction to the upside. Now in a major, what will we see? We can see this and it can continue down. So it can go like this and then can mitigate down, but that is dependent on the internalized range and what happens next if we trap sells or if we trap buys. Okay, so that's why we keep it as undetermined. We don't want to guess our way through it. We want to be as objective as possible. But with a major, what you'll usually see is you'll see buys get trapped. Okay, or you'll just have a vector level as that last point of demand. So we can trap the vector level in this case, right? Just delete that. Put that back there. We can trap the vector level or we can respect the vector level out like this and then obviously end up trapping buyers and then we have continuation down. So that's the important thing with using our vector level understanding. But we can also have a vector level and then we can end up having a POI down here. So it ends up being a medium. So it just really depends on the predeterminism price gives us. What am I talking about? Predeterminism, like where? It's all about that build up before we hit into there. Before things happen, slash the sweeps of liquidity, we're looking to create something for the near future for it. Okay, so really important there. Um, So keep it undetermined. Just follow price. Mark out your strong highs and strong lows because that's what price will react from. Look back on the algo diet. All right, what's the algo feed from? What's it allergic to? Last point: order block rules for inducement strengths. Now this stuff's in the chart. Okay. Um, right from the chart, you want to see the dot points. This I haven't really specifically mentioned this, but inducement strength is hard. It's really tough to do. Um, it takes a lot of practice. You have to know everything before you apply it, like the institutional rules, the order blocks, visited, not visited, swept into. You need to know this stuff at like the back of your hand. Because if you mark something minor and it doesn't work, you'll be wondering why you didn't enter that whole trade because you marked it minor in the first place, for example. So make this the last thing you guys really learn because it is very difficult. Okay. Um, but essentially, like I said, to simplify as much as possible, I want you guys to see medium and major as the same thing, valid. Now, I know that with a medium, for example, um, obviously predeterminism is a big factor. Okay, we have a medium inducement here, reacting from this POI here. Um, yeah, it's a big factor, that predeterminism. But also, I'll be seeing the fact that it's against momentum. So we might be having a strong bullish momentum. We might be hitting into a weaker POI from the left. How do I think it's weaker? Because, like I said, it's not on the side of momentum. It could be a weak high or weak low, like now targeted high or targeted low. It could have minimal inducement within here. There's quite a few factors, right? But I want you guys to see medium and major as the same. When you're at that level where you can advance to the next one, we can go through it in another video, okay? But like I said, it is quite difficult. So leave it as undetermined or X undetermined and wait for that predeterminism. Then we can step up to that next level. Now with minor, it's a little bit different. Minor is good because it is reacting from an invalid POI. Okay, what makes it invalid? Number one, weak high or weak low, right? So we have orders here, but we didn't sweep liquidity and break structure. We broke structure, but we didn't sweep liquidity, which would mean that that we have orders that are transferring to this area, but there's no institutional, uh, you know, interest to keep moving down. So we just sweep liquidity, continue to the upside. That's number one, the first invalid thing. The second invalid rule is smart money trap, right? We have a break and a sweep, but we have no inducement. So we can run up to that, pull back, and then continue to the upside. We can use the high as an inducement and then pull back as a minor and then continue to upside. Doesn't matter, right? Invalid. That's the main thing you got to understand from that. Um, Also, unranged imbalance. So, what's unranged imbalance? We have a break of structure here. We have an imbalance within here. Is this imbalance within that break of structure? No, it isn't. So when we come and react to it, we pull back and, well, even we can pull back, continue from here and then drop. What would be the minor inducement? It would be here, coming into that unranged imbalance zone. If it's ranged imbalance here, it's very different, obviously. Okay, so invalid, invalid. If you need to know more about minor, let me know and I can go through that as well. Um, there was one more thing I wanted to go over that's not on this list. Let me pause it and recall it one sec. Okay, so the last thing was actually something that happened on EU just yesterday. So let me go into that example. Go on the 3 minute, that should be fine. Um, so this beautiful cell here, okay? So what am I actually looking at? I'm looking at this line here, okay? Why can we use this POI? It didn't necessarily sweep liquidity and break structure, did it? You could say it did, of course, but it wasn't its own independent. Why can we use it though? Because it comes as a mitigation from this sweep and break, right? So what's actually happening here is we're having our break of sweep liquidity, our break of structure, right? Let's just say it's here. And then what we're having from that, and I'll actually redraw this a little bit, is we're having a mitigation from that level, just like that. This price is actually mitigating from this institutional money. So if we look here, here's where we had our break, right? And then, like, I'm not going to draw all the zones, but mitigated, we mitigated. This came in, swept, mitigated into that break. This came in, mitigated, and then we detached, right? So we actually have this money is institutional money from this movement here. And this is cheeky, it happens a lot of the time, but it's really important because if we have a a range, right, where we have a strong low that forms, then we have something like this, and then our other range, the other side of our range, right? We could be looking, we could be saying, oh, extreme range orders. We got to make sure this is mitigated properly. Um, first off, right? Even if it's not, it could be a future zone. That's completely fine as well. But like our zone could be right here because it's come from that extreme range movement. So in this case, we had the high that formed. We came, we swept. So this is what created that sweep, right? This low. So that's all we have to sweep in to visit, which we did, right? We swept liquidity in to visit that area. And then again, right? This low swept this high. So we come in and visited that there. This is all mitigation chain. We don't have imbalance. You might say, oh, okay, well, we do have imbalance here. That is ranged imbalance because it's within this break, right? So that's not the imbalance I'm caring about or I'm looking at. That moved all the way to this point here. We detached. We have a range high. We have, this isn't the strong low that formed. This is a strong low that formed. Reason being, it created like a very low time frame strong low, but we actually end up trapping it, right? And then we push deeper. So our premium discount is here. In our 50%, what do we have? The inducement level, but we have the POI coming from this sweep liquidity break of structure here, okay? We come into that, we have a vector level reaction, come into that POI, and we moved. So where have the algo movement orders, the extreme range algo orders moved from? All the way here to here. But wait, aren't they meant to move to here? No, they're not because we moved all those orders down to this POI here. So this happens a lot of the time. So I want you guys to be mindful of that. All right, we can move price down to different points because we have this weakness, right? We have a lot of bearish momentum. We don't have to go all the way back up here, but we're following algorithmic mitigation. Okay, that was that last point I wanted to give you. Hopefully you guys like this video, and like I said, we'll do this every month. We'll collect more and more questions you guys have, and yeah, we'll do it at the end of the month. But yeah, if you have more, let me know.